Today I would like to talk about one of the most asked questions. No, I have to correct myself. It is actually at the moment the question I get asked the most. And that question is, Dirk, is it at the moment a good time to buy stocks? Is it at the moment a good time to, for example, buy Bitcoin? And I kind of understand, of course, this question because we just need to look here at the Bitcoin chart, which appreciated from all the way down here to so around 30,000 US dollars to at the top 108,000 US dollars. And of course, people are kind of afraid that they miss the train on that. At the other hand, nobody wants to be the fool, of course, that invested up here, bought at 108,000 US dollars just to see the price go down here to 91,000 US dollars again. Because obviously, especially if you're a beginner, this puts a strain on you. This is like on a psychological level, very, very hard to digest. And chances are that when the price reverses then to 91,000 US dollars, you know that you're going to close your positions, you're going to sell everything just to see the price then appreciate to 100,000 again. So what can you do? How can you time in a bull market, for example, your investments better? And there is surprisingly a very easy concept, in my opinion, that everybody can apply. It's really not rocket science. And after you've seen what I want to show you here today, you can basically do that for any asset out there that is an asset that likes to appreciate over time. So this works very well on, for example, the stock market, like here the S&P 500, or also on Bitcoin, because it's a concept that works well on assets that like to grow and appreciate over time in price. And obviously, this is true for stocks. This obviously has been also true for Bitcoin over the past 10 years. Now, this whole concept is taken into account the basic market structure, really. And the basic market structure can either be that we are in an uptrend, that we are in a sideways trend, which would look a little bit like this, or that the market can be in a downtrend, which would look a little bit like this, right? And this sounds very basic, but in my opinion, it's one of the fundamental truths you need to understand about the markets. So this structure here, an uptrend, is always, you'll find something like this always in bullish markets, a series of higher highs and a series of higher lows. Very easy, and I think we can see this here, for example, on the S&P 500 also very well, where we have a series of higher lows, we have a series of higher highs, until eventually then the market structure sooner or later will break, and then we get a sideways trend or we get a downtrend for a while until the train continues upwards. And the challenge now, of course, is here to time a little bit the investments, because like I said, you don't want to be the person that invests into the market always at the local top. You know, here at 6,100 points, then the price reverses to 5,900, or maybe you were the one here at 5,600 points just to see the price going down by over 10% to 5,000 points again, and so on and so forth. Now, the good thing is that, in my opinion, there's a tool out there that makes timing your investments in a bull market much, much easier. And these are the so-called bull market support bands plus an 8 weeks moving average. Bull market support bands, also an indicator if you're using TradingView, that you can find here under indicators, bull market support bands. And you can see here it's just a 20-week simple moving average and a 21 weeks exponential moving average. And in this indicator, they are combined. So the green and the red line down here with a little bit of yellow filling in between. I always like to add another moving average to this, which is an 8-week simple moving average. This is the thick blue line you are seeing here. If you want to invest with a strategy a bit more aggressive, you can choose, for example, the blue line here, the 8 weeks moving average, as your investment trigger. If you want to play it a little bit more conservatively, you can use the bull market support bands. I'm going to hide this line now because what you'll very quickly see is that this bull market support bands in a bull market tends to be a very good area to invest into the market. So that was true here in the end of 2023, for example. That was true here. That was the case here. It was the case here. And just a couple of days ago, we touched the bull market support bands here around 5,800 points again. So if you ask yourself the question, I haven't invested in stocks yet, but I think it's going to continue to go up, which, by the way, this is my opinion as well. I shared this in my last video, kind of my outlook for the stock markets and crypto markets for 2025. So you want to look at that video maybe also too if you want to get an opinion on that. But like this, you do not need to rely on anybody telling you, hey, this is a good time now to invest in stocks again. This is a good time right now to maybe buy a little bit of Bitcoin again. Because you see it works here. Bitcoin is a more volatile asset, I have to say this. So you'll have always zones where sometimes the price will overshoot the bull market support bands. But since in the beginning of 2023, since the recent bull market structure started, these were actually always pretty good times in the long run. Long run, I mean a couple of months here, to invest, for example, in Bitcoin. And to answer your question, so if you also believe that the market is still going to appreciate this year, for example, and you want to make sure that you get a good price, well, you should wait really until the price eventually touches the bull market support bands again. As I said, if you want to play it a little bit more aggressive, you could, for example, here for Bitcoin, also use the 8 weeks moving average, which we are actually at the moment kind of trading around here as a trigger to invest and then ride the wave upwards. For the stock markets, I personally prefer actually to use the bull market support bands here. As I said, you can find these as an indicator on TradingView as well. And that way, it's really simple. It's not rocket science. And with just applying here basic moving averages, you can maximize your potential when trying to reinvest into the market. If you want to make sure, and if you want a little bit of relief from the fear that you end up always, reinvesting at the top. Now, in the long run, of course, that wouldn't super much change anything as well, because, bull markets, of course, tend to go further up, but always investing at the high kind of puts a strain on your psychology and makes your life as an investor and trader more difficult than it should be. That's it already for today. If you like this video, leave me a like and subscribe to the channel. Also make sure to leave me a comment on what you would like me to talk about on future videos. Take care, everybody, and bye-bye.